Best Trading presents How I Use the Fibonacci Percent Drawing. Here is your host, Jeff Glass. Well, hi there. Yes, he's here, but he is getting ready to trade. Oh, he didn't tell me you were coming. Come on in. He is over at his trading desk. I am sure he would love for you to join him.
Now, what you see up here on the screen is a chart. It's a 2-minute chart, and it's been going all day. It's pretty much almost 3 o'clock, so you can see we're looking at 2 days. I'm going to zoom in on this. It says we don't need a full 2 days. So let's take a look there. Pretty much all day today, up to 3 o'clock, starting at about 5 to about 3. Now, this is how I use the percent drawing. On the Thinkorswim platform, it is up here at the top. You'll see that arrow and the word that says drawings. So you click on that, click on drawing tools, and then down here, right there, you'll see a percent sign. So click on that percent sign, and your mouse cursor turns into a pencil because it is a drawing. Now, the way that you draw this correctly is you start down here at the bottom, and you say, in this case, it is right here at this red line, which is yesterday's low. It just happens to be today's low also. So that works out just fine. So you can click right there, left click. It will draw these blue lines, as you can see. And then you go up here to the very top, the high point of today. See right there? And we click it again. And that sets it in place. See, now I'm moving my pencil, but the Fibonacci percent lines don't move because I set it in place, and that's how you draw it. It's that simple. Now, you could, sometimes the low of the day will be lower than yesterday, so there won't be that red line there. So in any case, you start with the lowest point, and sometimes way over here in pre-market, you might find a really low point. And then you go all the way up to the highest point of the day so far. So if you're doing this at 11 o'clock, you'd be like right here is the high point. And then at 12:30, right here is the high point. But it's almost 3, and so here's the high point right now. Now, the only time I use the Fibonacci percent drawing is when a stock is gaining a lot. It's moving upward quite a bit. For example, this is 10, 20, 30, 40, 50, 60, a 70-cent move. So right here, when it was up 30 cents, I would consider that to be a good move. So I would have used put the Fibonacci lines on there at that point. But I just picked this stock for now to show you because I wasn't watching this at the beginning of the day. So when you first draw it the first time, you see all these horizontal lines. They're going to all be red, all of them. They're going to be solid red. And you can color them like I did, see? And I'll show you why you want to color them. So I colored the bottom one a dashed red. And the center one, you can see here, is a dotted yellow. And the top one, the highest one, is a dashed green. Now, above the yellow, there's a blue line and then a dashed gray line, a dashed blue line and a dashed gray line. And then also below the yellow, there's a dashed blue line and a dashed gray line. Now, that's the way I colored them, and that's the way I created the dots and the dashes rather than solid lines. Now here's why I color them, and let me show you. So, well, I'm going to go back up here and click on the drawing again, and then go over here and click on the pointer because I don't want the pencil. I want my pointer back. So to get it back, you just do that again and click pointer. Now I've got a pointer. Okay, so I don't need to watch this whole day long chart. So all this stuff that happened at the beginning, I mean, that's already happened. It's over. That's not information I need anymore, except I do want to see where the middle is. See that dotted yellow line? That's the center of today's low and today's high. That's the middle. So I want to always keep that on my chart. So I am going to zoom in on this chart, see, because I don't need all this stuff that happened earlier. So we're going to zoom in again. There, now we're looking at it from 11:40 to up to 3 o'clock. So now in this case, you see it still has the entire movement today from the low to the high. And this is a 2-minute chart, by the way. But what if this thing had moved up $1 and now all they want to focus on is the last couple of hours? Well, you can't get a dollar chart on here and still maintain a low price ledger. For example, over here on the right, my price ledger is 10 cents each. See that? 70 cents, 80 cents, 90 cents, $1, it's all 10 cents. So if you had a dollar move here from 70 to $1.70, you see how these 10-cent increments would be all squished down? Okay. So it's not real convenient on looking at your chart because it looks like it's all just kind of level. So what I would do is I would zoom in, and there's different ways to zoom in. I've been using this plus and minus zoom down here, but I'm going to zoom in just on the last 2 hours here and focus in on just what it's been doing from the day's high to just below the middle or just below the average of the day. And the way you can do that, another way to zoom in, is you place your cursor where you want it, like right here, click the left mouse button, and then draw this square or rectangle. See, I'm going from the top of the candles to just below the average. I'm going to include that blue dotted dash blue line, and then I'm going to let go of it, and there it is. See, it's from up here, right up here, the top green line, to the blue line that's just below the average. And look how much bigger these rises and falls are. Look how much bigger the candles are. And over here on the price ledger, it's 5-cent increments. So, see, that might really help you in deciding how much shares you want to buy, and hopefully helps you when to buy and when to sell in some way. Because, for example, this has gone up twice now, right? Since, let's see, yeah, 150. It's gone up once here, then down, then another one. Now see it dropped down, then it went back up a little bit. So I'm looking at it and I'm going, well, what's going to happen next? It's gone up twice, once, twice. Now it's dropping back down. And so I use these lines to help me decide what to do. Notice that when this stock dropped in price, look right there. The low point was right on that dashed gray line. That is what Fibonacci percent lines will help you and do for you. They'll show you where stocks are likely to go down to and then bounce back up. So it went down to that dashed gray line and bounced back up. Looks like it's going to go back all the way to that green line, the high of the day. Might not make it that high, but that looks like what it's doing. So look back over here, and you see these. Where did it go down? Just below the dashed blue line. There's the dashed blue line right through there. So just below the dashed blue line. It didn't go all the way down to the average. See, none of these candles goes down all the way to the average. If you're wondering what that dotted gray line is right there, that's the VWAP, volume weighted average price. And so it went in between the blue line and the yellow line. So I could see that here it didn't go to the average. Here it did not go to the average. Here it did not go to the average. So I'm thinking that's probably going to go back up again at that point because, it's not going any lower than that. So it's ready to go back up. So even on this one, see, it didn't go to the blue line or the average. It stayed right there. So that's sort of an indicator that it's still going to go up again, which it did. So what I would expect it to do this late in the day, as more people leave and are not trading anymore, that means volume should be dropping. And if you look down here at my volume, which is the gray bars, you'll see this was a high right here. This was a high bar here. And all these green lines are high bars. And now look at the volume. There, it's dropping. Look at the volume here. It's dropped way down. So I'm going to just predict that it will continue to drop. And the rule of thumb is that stocks that rise usually go down 50% of their rise. Well, where's the 50% mark? It's right in the middle of where you drew those lines. Remember, you started at the low of the day and went up to the high of the day. So the 50% is right in the middle of the high and the low. And it's identified by this, it's identified by this dotted yellow line. So I'm thinking this is probably going to start going back down toward this dotted yellow line, which is the 50% mark. And I would say it's probably going to level off at that point, go to the right and level off. I mean, it's 3 o'clock, so there's only an hour left in the market. And you see how it leveled off over here pretty close to the yellow dotted line, the average. All this is very close to the average, and it was level for a long time. That is an hour right here. So I'm thinking it rose again. And what happened is some people bought it, it went up, and then they sold it and got out. So that looks like that's going to be the high of the day, and it looks like it's going to go down to the 50% line, which is the yellow one. So that's how the Fibonacci average, Fibonacci lines are going to help you see how far down, how far up these stocks will go. And see, I can't see the bottom line. I can't see the red line. I can't see the gray line or the red line. But I don't need to because I just want to focus in, see on this right here. But what this does is it helps me say, well, I can see all this, and I know it's above the average. See, it's above the halfway point. So that's going to help me in my decisions because I'm thinking it's probably not going to go up anymore. It's probably going to go down. But if it were below average, see, I might, if there was still good volume and lots of trades being made and the price was creeping up, then I would say, it might go up to the average again or even above average. So, but when it's above the average for the day, and this is near the top for the day, so I'm thinking that's probably about as high as it's going to go. It helps me make my decisions. Now I have other things on there as well. That this is not the only thing I'm looking at to make my trading decisions, obviously, but this is just one thing. So I'm just showing you this one thing that is helpful. I also use a lot right here. See that volume? That's the current candle volume right down here in this lower left corner. Current candle volume. So that is just under 500,000. That's pretty good for this time of day. but I still don't think it's going to go up because of this is the high, and here's the average for the day. And I use these bars right here, these labels, and this tells me what percentage of the trades currently on that candle, 2-minute candle, what percentage are buyers and what percentage are sellers. And this is 60% buyers, 40% sellers. It was up to 75 a minute ago, and it's just dropped. So that tells me that the number of buyers are dropping. It's now it's the other way. It's 40-60. So I just went down another 20% in terms of percentage of buyers. So I heavily rely on those things to make my trading decisions. So now you can see how to use the Fibonacci. I want to say Fibonacci, but they pronounce the I's E's in Italy. So anyway, so now, like I said, I only use this on stocks that are really rising well, good amount of rises, 30 cents, 40 cents or more. Now you can do the same if it's dropping. If it's a stock that's dropping, I also use it for the same purpose. I want to see where it's going. Let's say it goes all the way to the bottom, and I'm thinking, well, you know what? It might go at least back up halfway, so it might go to the yellow line. So I would then set my pointer where I want it, and I would zoom in on the lower half of the Fibonacci lines. So that's all I'm be looking at. And the reason is I want to get this dollar amount spread over here, so it's not all crammed together and like that. See, I want it spread out so I can read the candles better, read the charts better. Now this is a full one stock chart on a 20. This is a 32-inch monitor, so there's plenty of room on here. But see, I look at 6 charts at a time on this 32-inch monitor, so I don't have a lot of room for big spreading of the price ledger. And so I need to zoom in real close on some of these candles, and because there's 6 of them on this one monitor. And so when I zoom in, I want to keep my perspective on where this stock is. Is it above average or below average? And that's why I would zoom in only, see, on from the top to just below average there. Now see, if this was all, I'll show you what I mean when I say I have 6 charts and I can't see them so small that it's hard to read. I'm going to see this little back arrow right there. That's because I enlarged this chart. I maximized it. So now you see these little squares up here? Those are my 6 charts. I'm going to go back to that. See, there we are. So see, I have 6 charts, and you see how difficult it would be to read this thing like this, have from the day's low to today's high, all on one chart, because now my ledgers the prices are 20 cents apart, and it's more difficult to read. So all I want to look at is this right here, so I can make a decision on what I'm going to do. There, now my price ledgers are 10 cents, and I can see that clearly. This is a 2-minute chart, and I prefer a 2-minute chart among anything else. I've tried all the time frames, and 2 minutes seems to work really good for me. So that's the Fibonacci percent drawing. I wanted to show you one more thing before we go on this, and that is when you click on the Fibonacci drawing and you click over here to draw it, it comes up, and you draw it, but it's going to come up all red. So you could just put all the red lines up there on your chart. Then go up here to your studies. It says edit studies. Click on that. And you would go to, let's see, that's not going to be on here. Yeah, that's not on there. I remember. You can just put your mouse on one of the Fibonacci lines right click it. Okay, let me try that again. Right click it, and it says edit properties. So this, oh, you can't, it doesn't show up on the screen. I'm sorry. I'm going to put that up there later. I'll put up an image and show you what the screen looks like where you can select your colors. Now I select from 0 to 1, and so my average is the 0.5. So I set my top to green, my 1 to red, and see I've checked them over here to make them visible. And then I choose my 0.5 and make that yellow. Right above there is blue, right below is blue. Well, that is gray and that's gray. Now over here, see, I make them dashed. The average yellow is dotted. Those might be just smaller dashes. And then over here, they're all just one width, except for the average is 3. So I really want that average to stand out. Now, once you've got those set, then you can click this right here that says Save as Default. And it will save those colors and the dashed lines and your width, everything as the default. It will always come up that way from now on. So don't forget to do that and set it as default. You do all that work and don't set it, then you'll have to do it again, setting all those colors. So that's how you use it. It's basically something that you can use to keep perspective on your charts when they go up quite a bit. Sometimes, you know, a stock that goes up $2 or $3, you don't need to look at the entire rise. You just want to focus on where it is now, you know, the last 2 hours. But keeping that average in, you know, located on your chart, see, like this. I'm going to zoom in one more time. See? There, that's all I want to look at. See? Now look, it did go up. It went up 10 cents more. So, you know, that really will help you if you've got a lot of charts up because they're smaller. So there you go. Thanks for watching. Don't forget to watch my other videos as I'm going through all of my studies, everything. I'm showing you everything I use. So take a look at them and happy trading.
Be sure to click on the logo to subscribe to Best Trading, then click on one of our other videos. Thank you for watching and happy trading.